Welcome back to EDS, and in this video we're going to take a look at how you can manage positions once you've already opened them, what it looks like in a real portfolio, what we did in this last week, and hopefully this should open your eyes about the reality of what it looks like to write options contracts. So let's just go straight into it. The market is closed. It is a Sunday evening. And we're just going to leisurely take a look at some positions, and hopefully you'll be able to pick up the theme um, that we're trying to display here in this video. So the first thing is we've got 4 positions on at the moment. Um, Everything has got plenty of time left on it except for SMH. It's got 5 days left, and the reason for that is simply because it is a covered position. The risk is defined. We're not too worried about gamma risk. Of course, gamma risk increases as you get closer to expiration, but because this is a covered position and not a naked position, we're not too worried about gamma risk. We're just going to let SMH expire worthless. It's essentially an iron fly at this point, and it looks like we're just going to take the max loss. However, we have rolled this position and collected credits. We initially collected $1.38. We collected an extra 62 cents and then an extra $1.26 on top, bringing the total to $3.26. So we'd be looking at taking the max loss of whatever the difference is between $5 minus 3.26. However, if we didn't manage this, we'd be looking at the max risk being $5 minus 1.38 as opposed to 3.26. So that's the power of rolling. This is just we're just going to take a small loss on this most likely, unless if something happens in the next 5 days. But we're not too worried about SMH, and essentially we've done nothing on this position. We've just let it work. UAL is the next one that we're going to take a look at, as we can see here. Well, we'll just open the chart first, actually. So this is an inverted strangle at the moment. As you can see, we have made quite a few adjustments to this. We originally collected $1.10. Now we're up to $6.92. We've just been rolling. We opened the position around here, and prices literally just blown straight through our call and just call strike and just kept going. So we've just been adjusting this position, and we've collected a nice healthy premium. Hopefully we can see price come back into the range, the inverted range that we've got here. And also with UAL, we did have to roll it out in time, and that unfortunately put us in a position whereby we are going to have to manage earnings in the next 2 days, whilst we've still got 30 plus days on this contract. So if we look at the chart here, as we can see, this is what happens when you start coming towards earnings. Implied volatility just increases. We see IVR here. It's pretty much just increased. This trade is a perfect example of something going completely against you in every way possible right from the offset. We started here, as we can see, our deltas got completely messed up. We've had to rebalance our deltas, and also volatility has just been going up as well. So this has just been a disaster from the start, and it's fine because we know from the get-go what our likelihood of success is, and this is just one of those trades that didn't work out. And instead of just taking a loss, we are managing the trade, and we're going to try and work this back to a break even. The goal is we keep the winning trades. We make money on the winning trades, and on our losing trades we try to break even. That's kind of the ethos here. So we're just working UAL again. This week we did pretty much nothing on this position. Hopefully you're starting to see a pattern emerge here that if there's nothing that needs to be done, do nothing. And that is almost always the best thing to do when it comes to writing contracts. You have to remember these are 30, 45, 60-day long contracts, sometimes even longer. And it's fine. 1 week of worth of trading is 5 days. There will be points in time where there is nothing to do, and it's okay. The point of this video is simply just to let you guys know that this is the reality of what it looks like, and you won't always be doing something, but that's fine. You don't need to stay busy. That's when you will probably end up getting yourselves into trouble. You just want to stick to the fundamentals and let the mechanics play out, basically. So these are the 2 positions that we're essentially managing, and we've got 2 futures positions here. that currently are very nicely in profit. We've got the Australian dollar futures. We're at 34.2% profit on that. We'll probably look to close this position when it hits about 50%. We've got the micro crude oil futures on as well. As we can see, volatility has been increasing a little bit. We put this position on a little while, but how long has it been actually? It's been about 10 days. Volatility was really nice and high, and then it contracted. We had a nice spike in our P&L. Volatility has seemed to be coming up again, but that's completely fine. As we can see, price is well within the range. We've got nothing to worry about. Again, we did nothing this week on either of these two futures positions. We simply just let everything play out, and that is the key message in this video today. We did practically nothing in this portfolio, and that was the correct thing to do. And if you find yourself in a situation where there's nothing to do, it's fine, it's okay, you're not doing anything wrong, it's normal. And that's the point of this video. One other thing that to keep in mind, I know we didn't cover how to find and open positions in this video, but it is good to know anyway. You need to keep the size of your positions in check. The only way we can actually have a stress-free time trading is to manage the size of our positions. That's how we are able to simply just do nothing for a week and everything is still okay and our portfolio isn't about to blow up because of our position sizing. So how do you know what size? How do you know how to size your positions, right? Well, we've got a position sizing template here. It's free for everyone to get a copy. Link will be in the description. The way it works is you enter in the size of your portfolio. Let's just say if it's $15,000. Below that, you will then enter in what the current VIX level is. Let's just say if it's 32.1. Below that, everything will then be automatically calculated for you. And at this point, all you need to do is simply use the information provided to form the backbone of your portfolio. It will tell you how much buying power to allocate to any undefined risk positions, defined risk positions, how much of your portfolio to allocate to short premium strategies in general. And as long as you follow what's here, you will be absolutely fine. Link to this spreadsheet is in the description. It's free. Just click on this free position sizing template here and it'll take you to where you need to go. If you want to learn in more depth, see what positions we're placing, get alerted every time we open positions, manage positions, etc., and you want to make money with us, again, click the link in the description. Head on over to EDS Premium and get yourself signed up. Inside, you will have access to our portfolios, like I said, with live updates and management and adjustments. And there's also a full course as well, so no prior knowledge is required. We will teach you everything you need to know, and if you still get stuck, it is of course a private community, so you can speak with myself directly and with other like-minded individuals. So with that being said, if that wasn't enough, sorry, there is also a 100% money back guarantee. So once you've studied our full course and followed our trades for 6 months and haven't seen results, then we will work with you for free until you do, or you can simply request a full refund. So it's completely risk-free on your part. It is £1 a month to join right now. The price will be increasing. However, once you're in, the price is locked in for you. As long as you don't quit and then rejoin at a later date, you won't need to worry about future price increases. So you are rewarded for getting in early. And with that being said, I will see you guys on the inside.